Hello and welcome. I'm Andrew Howard, Chief Investment Officer here at Equip Super, and I'd like to welcome you to this investment update. Firstly, I'm very pleased to report that we have delivered another year of strong returns to our members, headlined by the MySuper default option, which returned 10.21% for the financial year. It was also a great year for the Growth Plus option, which returned 12.36% for the year, as a result of its higher exposure to equities. These strong returns build on the performance that's been delivered in the past 2 years, which has resulted in our MySuper investment option returning 9.76% per annum for the 3 years to the end of June, and our Growth Plus option returning 12.83% per annum for the same period. As we know, it's been an exceptional period for equity markets, both here and abroad, and this has been the primary driver of the returns delivered to our members over the past 3 years. But as I will highlight, while the last 3 years have been a great time for investors, we believe it's important to ensure that we don't become complacent at a time where there's still so much uncertainty pervading markets and the broader economy. While equity markets have delivered double-digit returns over the past 12 months, it's been a year punctuated by periods of extreme volatility, with one of the primary catalysts being the election of President Trump and his plan to introduce reciprocal tariffs on over 50 countries all around the world. As I touched on in our last update, Trump's Liberation Day on April 2nd resulted in extraordinary events in markets. Equity markets fell sharply following announcements, and then just as quickly, we witnessed an extraordinary rebound which resulted in the US equity market finishing the financial year at all-time highs. Trying to preempt how markets will react to the next Trump tweet or the ongoing instability in the Middle East is fraught with danger. For now, investors have appeared to look through the ongoing trade tensions and the fact that tariff negotiations are in a state of flux and continue to propel equity markets to new record highs. But as equity markets move higher, valuations become increasingly stretched. And for us, this reinforces the need to avoid becoming complacent despite the strong returns being delivered to our members. We want to ensure we maintain a well-diversified portfolio focused on delivering a consistent pattern of returns in all market environments, while also maintaining robust levels of liquidity. This means the strong returns we've reported for the last 12 months have been achieved without taking on excessive risk. For now, the US and global economy has remained surprisingly resilient in the face of the ongoing uncertainty around the tariff and trade headwinds. In the US, unemployment remains low and inflation has trended down, all of which is supportive for risk assets such as equities. However, expectations are for growth to weaken over the course of the rest of the year as trade pressures continue to mount. And while investors are pinning their hopes on a rational outcome to the tariff negotiations, uncertainty remains on what ultimately the final rates will be and what the ramifications of these tariffs will be on the economy. As we know, the US Federal Reserve is following the tariff negotiations closely and has made it clear that at this point they're holding interest rates where they are until there's greater clarity on what the potential impact of tariffs are on inflation. Investors will become increasingly nervous if the Fed changes course from its current path of lowering rates in the second half of the year. There is a lot that investors are grappling with as to where markets and the economy go from here. But for now, investor sentiment remains buoyant. There's continued optimism surrounding AI, as illustrated by Nvidia becoming the first company to hit a market capitalisation of US $4 trillion. Earnings per share remain robust and corporate defaults are low. For us, we believe that the majority of good news is already priced into markets, and so we expect to see episodes of volatility in markets for the foreseeable future. As a result, it remains crucial to ensure that we're disciplined in not reacting to short-term noise and maintain an investment strategy that's focused on delivering strong, long-term returns for our members. If you'd like to find out more information, including the latest investment returns, please head to our website. Thanks for watching.